Hey guys, welcome to an all new video. This is basic investment terms, and today we're going to be talking about EBITDA. Some people call this EBITDA. I'm just going to refer to it as well as EBITDA. Now, what is it exactly? You can see that often on balance sheets, on income statements, and we're going to try to enlighten some of you guys here, or at least to give you a little bit of an idea on what it is exactly and how it can be used. So let's say we have in the middle here our company. Let's pretend this is a bakery and we bake cupcakes. All right, so there's money going in from our operations, but there's also expenses. There's also things we have to take care of once we do get paid in order to get to our final net earnings, right? So we have interests, we have taxes, we have depreciation, and there's also amortization, all right? But at the end of the day, there is a balance from what goes in and what goes out, but we're left with earnings. Once we're done paying all of these things, there are earnings at the end of the day. So what we're gonna wanna do is use EBITDA to try and compare ourselves to our competition, let's say, in order to find out who is the best, in order to who has the best capability to generate income, all right, to generate income that is based on their operations exactly. So how much money did I make from selling muffins? How much money did I generate only from selling the cupcakes, let's say, all right? So what we're going to do is we're going to start from the right, and we're going to take the earnings and we're going to backtrack. Okay, we're going to be adding things that are in the red here in order to backtrack and get back on the left side of the equation in order to estimate how much our operations actually can generate income. Okay, so we're going to get earnings, and we're going to want to add interests and taxes. So that's earnings before interests and taxes. That is called EBIT, all right? And once we add as well depreciation and amortization, that is known as EBITDA. So earnings before interest, taxes, depreciation, and amortization. So that is what EBITDA means. Now, why is it important, and why is it an important comparator of the capacity to generate operational income? Well, think about it this way. If I take out a loan to buy my building in which I'm going to set up my shop and sell cupcakes, then I have to take out a loan, and that loan I have to pay an amortization on it. I have to, I have to get rid of it eventually over time. So I've taken out a loan, let's say 10 years ago, and I'm doing payments on it. I'm amortizing on my loan. And is that really taking anything out of my value, or is that really a good reflection of what I'm capable of doing in terms of income generation from my operations? Not really. Okay, it's totally independent, totally unrelated. And if you think about it this way as well, let's say I bought muffin pans to do my cupcakes and to bake. I bought equipment, I bought stoves, I bought fridges, I bought everything like that. And all of these things are material, and so material possessions and assets depreciate over time. Let's say they lose 2% of their value over time, or 5% of their value over time. That doesn't necessarily reflect, or shouldn't necessarily be taken into account if I want to compare myself to a competitor in terms of capacity of generating income from my operations directly, right? So I want to take that out of the equation. So I'm going to get my earnings before interest and taxes, and I'm going to take out depreciation and amortization as well. So I'm going to put myself on an even playing field with my competitors. So I'm going to say, okay, let's say we both have no debt, no amortization, no depreciation. We haven't paid any taxes yet, and we haven't taken into account interests. Who has the best income from operating income? Who has the best operating income? Who has the biggest capacity to generate income from their actual business model? Who sells cupcakes the best? That's what I want to know, and that's what I want to compare. And so that's what EBITDA does, and that's where it comes into effect. And EBITDA as well, you can have some interesting ratios based on EBITDA that can give you a good valuation metric to compare as well to competitors. So I'm going to stop this video here. I just wanted to give you guys a brief overview of what it was and how it works. I'm going to do more videos on the ratios in question that I'm referring to here, and how these can be used in order to compare a company with another company, and so how they can be put sort of a head-to-head situation, and how they can be used in that situation. So I hope you guys enjoyed this video. If you did, don't forget to leave a comment, leave a thumbs up, and definitely don't forget to subscribe. Thanks guys, have a good one.